Alright guys, welcome back to the channel. I hope you've all had a good weekend so far. Today I'm going to be going over the correct supply and demand zones to be taking. Now this is something I used to struggle with, and it becomes very simple once you understand why the zones are being used and which zones are not being used. So as you can see here on the screen, we have some simple market structure, okay? Nothing too complicated. We have a high, low, higher low, lower low. And then we have this higher high, so change of character, and we eventually break structure to the upside, purging this prior swing high. So we know we're looking for longs, okay? Now, we want to find a valid demand zone in order to continue this bullish move, because we know we're looking for longs because we broke structure to the upside here. So we want to get in on the trend. Now, the first thing you would probably look at is this demand zone here. Why? Because we had this rally, base, and then a rally, which just means we pushed up, we consolidated for a bit before pushing up again, and this is the point where the demand zone gave that push to give the breaker structure. So you probably want to end up going long here, right? Well, unfortunately, wrong. So you may have some retrace, you may get some push, some slight push going up here off of this demand zone that you've chosen. However, there's a couple things that we need to notice, and that's what I'm going to get into. I'm going to look at some examples later on as well. So over here we can see that there is clean traffic all the way up, okay? So which means that there's no liquidity resting after this demand zone. So if price wants to come down here and use this demand zone in order to break structure to the upside and continue our move, it needs to get filled in a lot more orders, right? So it needs to have a big, strong push, it needs all that momentum, but there's no liquidity for price to get filled. And we know as supply and demand traders that we're trying to trade alongside the institutions, because they're the ones that are moving the market and they've got all of the volume and momentum and liquidity in order to drive price. But if we have clean price action here, there's nothing for price to then give that strong push that we're looking for. So price needs to find and seek liquidity in order to do so. So as I've shown here, if we enter here, unfortunately, well, some occasions it will work, but most of the time it will not, right? And we're looking for the most probable outcome. So a lot of the time you'll see that potentially you'll get some kind of move off of this first demand zone or supply zone if you're looking for sells, but price won't give you that breaker structure that you want. Now, we have liquidity resting underneath this base, don't we? So we have here, excuse me, we have liquidity now resting under this base. And what's even better is we had this form of inducement. And what's inducement? It's just enticing early buyers or early sellers and then using them as a form of liquidity. So, for example, if you had ended up entering here and looking for buys, you would have got stopped out if you were targeting this breaker structure. Let's just label this as our target. So you would have got stopped out. Now what that has done for us is actually built up more liquidity. So we already had this liquidity here from this base before we got that drive up. So there's resting sell side liquidity here. And then we got more built up liquidity after people would have decided to enter here. So now we're looking for a zone which has liquidity resting after it, okay? Why are we doing that? Because like I said earlier, we're trying to trade with the institutions and they need opposing liquidity to get filled on their big orders. Now, once we come down here, we can see that price has now taken this liquidity. So the institutions and the banks, or whatever you want to call it, they can get filled on their orders and they're looking for buys now, okay? We know that because we broke structure to the upside. So we have this demand zone over here, which you'll usually find a demand zone at the low. Doesn't matter what the demand zone looks like, there will be a demand zone at the swing low, of course. And this is valid. Why is this valid? Because we have found this liquidity here and this liquidity here, and price has taken it, so now it can get filled in as big an order as it wants to. The exception with this is sometimes you will see, we'll draw a similar one again here. So we had this, then we get this breaker structure to the upside, and price comes straight back down. Now we didn't have any liquidity built up here. This is clean traffic, okay? although we got this breaker structure confirming that yes, we are bullish, there is no liquidity built up after our demand zone here, which we're looking to buy off from, right? Now, in some cases, this will still play out and you will get that bullish push that you're looking for to give that further breaker structure. However, this low can be used as liquidity. So if you don't have liquidity built up after your zone, price can just come down, take out your liquidity, and then give that bullish move. Now, that doesn't happen all the time. You can still get that buy off of the demand zone, but it's very probable that that is also the case. So we don't want to be trading against clean traffic, right? So we have clean traffic here. We don't want to be buying from this zone. So we've got filled in this zone here, and you're most likely going to see that breaker structure to the upside. Now, something else to note, which makes this even more probable, is premium and discount. Now, for buys, for longs, we want to be buying at a discounted area, okay? The banks want to get in at the best price possible. They want the cheapest price to then buy and continue their trades in profit. So when we look here, we can see that this is far, let me just change this to equilibrium actually. So this is our middle point, this is the 50%. And we can see that this zone is just above discount. So the zone is actually in premium, which means it's expensive because we've drawn it from the swing low to the swing high. So institutions and banks aren't going to want to buy at that area. They're going to want to buy at a cheaper area, which is down here. So we can see that this area, this demand zone, is in our discount because it's below this 50% line, which is good because now we know that the institutions and the banks are happy to buy because they've got in at a better price. So that is what will confirm your zone. So you want to see liquidity and you want it to be in a discounted area. And if you're selling, you still want to see liquidity, but you want it to be in a premium area, okay? So we're going to now go on to the charts and see an example of this. Now, I will be in replay mode. However, you guys should know that I am not a replay retard, which just means that I don't go and cherry pick all of my zones in replay mode like every other trader does. And in fact, I called it out in my Discord here. So if we look at this, I called out on GU. We had this liquidity, we tapped into a higher time frame demand zone, and we created a new demand zone. We got that change of character to the upside that I was looking for longs on. And then, boom, we see that. So I'm going to break this one down for you guys. By the way, if you want to join my Discord, it's completely free. You can go into the link in the description below and you can join. I give out free trade signals each week, so if you want to take those, you can feel free to do so. But we're going to look at this example now. So, on the 30-minute, we have gotten this break of structure that we see here, okay? So we are bullish, correct? Now, there's a couple of things that we can look at here. We see this price action, which we looked at earlier. We got this rally, base, and then the rally. And we have this demand zone area over here, which gave that push to the upside. So a lot of times people would think, okay, actually let's drop down to 50-minute. People would think, okay, this is a valid demand zone to buy off of, because this is the demand zone that gave that strong push all the way to the upside. And potentially you may be correct. However, you're not going to get that full strong move that you're looking for. So if we play price here, we get some sort of rejection, but then price, boom, straight through our stop loss. So if we wanted to enter here, of course, we would have gotten stopped out. Let me just change this to entry. We would have been stopped out, unfortunately, and we were targeting this high. So price has clearly decided to reverse down and respecting the supply zones and rejecting this demand zone. Now we know why. So when we look at this example again, we can see here, this is clean traffic and there's no resting liquidity anywhere here. So price needs to find the liquidity before it can give that strong push, because they need to get filled in orders. So we're going to say, sorry, my microphone is in the way of my keyboard here. Oh, resting liquidity. Okay. What else did we notice? Well, we can see if we use the Fibonacci from the bottom to the top of the swing low and swing high, we are resting above discount area. So price is in a premium. right? Which means that the institutions and the banks aren't going to want to be filled in buys in a premium area, okay? We're still going to be looking for longs in a discounted area. So we now know that there's no resting liquidity here and price is in a premium area. So this is not the demand zone you want to be buying from. So we will label this one as incorrect. Now, what can we notice within this push all the way up to give this breaker structure here? Well, we can see now that we've formed some liquidity, right? We can see that there's this low here with a bunch of liquidity built up, but also we have this point over here and this point over here, which has now become some sort of trend line liquidity, okay? So we can see 3 touches, which is formed a trend line, which means people are going to be buying from this trend line, which means that price will have the opposing liquidity to grab and then look for its longs. So because we know that we have liquidity here, we can think, okay, now it's valid to look for demand zones underneath this liquidity. Now, what do we see? Well, we can see that this 15-minute demand zone here is valid, and not only do we have resting liquidity after our zone, but this zone simultaneously purged liquidity before it, right? Which meant that it could also get filled in on more orders. And we can see that here. So you guys can see once price purges liquidity, we get all of this momentum. You see how strong of a move that is? That is exactly what we're looking for. So now this is the 15 that we want to be entering off of, because we've found our resting liquidity. So price can get filled in orders now in this area in which it could not get filled into large orders over here. And what else have we noticed? Well, we can see that it's in a discounted area because it's below our 50% line. So price will be happy to be buying at this area because they've got it as cheap as possible. So this now becomes a valid demand zone. Let me just put this over here. Okay, and we have this resting liquidity. So now, when we look to go long here, and again we want to be targeting the breaker structure, targeting this breaker structure, stop us underneath the candle. Let's just set this as our target. Okay, now let's see how price plays out. Boom, mitigated our entry and flew into our take profit. And that is because it had all of the momentum from taking all of that liquidity out, okay? So it was able to give all of this push, this strong push. You see, we barely got any retracement because we managed to take out all of this liquidity, meaning larger orders could be filled, meaning more liquidity for the move, okay? It's very simple, guys. So to quickly summarize, what are we looking for? Well, one, we want to notice, is there resting liquidity after our zone? Okay, and that's what we're looking for. We're looking for there to be resting liquidity. 2, is it within our premium or discounted level? Okay, so that's the second confluence that we want. And thirdly, are we following the trend? Okay, so you want to be looking for swing breaker structures before you then look for your longs or your shorts. So for example, in this example that we looked at here, we saw that we got this breaker structure to the upside. So we're following the trend because we're looking for longs. Okay, so we're looking for longs, we're looking for resting liquidity, and we're looking for that discounted area. Okay, and that's it. It's very simple. There's no need to overcomplicate it, which is why I've shown you that this is these are the 3 stages that it comes down to. Is resting liquidity after our zone? Is it within our premium or discounted level? And are we following the trend? Simple as that, guys. And again, this is not cherry picked. I called this out in my Discord. Boom, we see it there. So I hope you guys enjoyed this video. I am just giving out free content, so all I ask for you is if you can drop a like if this was useful for you, and maybe you guys can implement it next week, as you know, we're just going to get into the new week, and you guys can maybe use this within your trades and within your biases. to confirm that you're choosing the correct supply and demand zones. You can find more videos and information like this in short form content on my Instagram if you want any more advice or you just want to see some more related videos. And again, my Discord is in the description. I called out these trades there. I send out free signals each week. Of course, you don't have to take them, but they're there if you want to take them. And I usually break down all of my trades on my YouTube here, so you can see my thought process and my analysis behind my trades. So yeah, guys, I hope you enjoy the rest of your Sunday, and let's have a good week of trading next week.